Hello traders, it's Samurai Trader here. Welcome to this training session on how to set up and trade the slow stochastic indicator with the day traders fast track program. As always, we do need to understand that there is a risk in trading. This is a members only video, so you'll see this risk disclaimer on every one of our videos. If you haven't reviewed it for some time, please pause the video and read the disclaimer. So first of all, please review the strategy PowerPoints which are in the folder on my Google Drive and the cheat sheets for the recommended stochastic settings and other tips and ideas on trading the specific setup. So I just want to run through with this video on what I'm looking for and how I actually set the indicators up, but you'll find a lot more in the strategy PowerPoints and the recordings, of course, on trading the T2, the T10, etc., where we use the where we use the slow stochastic. So a couple of rules that I just want to quickly run through. What we actually do, of course, is overlay two stochastics. We have what we call an LTS, which is a long-term stochastic overlaid a short-term stochastic. And as we use, say, the 21 EMA or the 34 EMA, we want to be trading in the direction of the overall trend. So if a stochastic is on or above the 80 level, that is, it's nearly overbought or it is overbought, what we're looking for is for a long trade. If a stochastic is heading down or it's already below the 20 level, we're looking for short trades. And what you'll find is, for the majority of trading opportunities, if you stay within these rules, it'll keep you on the right side. It'll dramatically improve the probability of your trade. Now, if the stochastic is between the 80 and the 20 and 80 range, that is, it's sloping up, you've still got a valid long trade. And of course, we see it sloping up if we're going to say take a T10, a money on the floor trade, or sloping down, we see the short-term stochastic come up and roll over. That of course is a valid short trade, and we'll see that in a moment. Now, if we see the long-term stochastic in what I call no man's land, that it's in between the 80 and the 20 level and it's flat, in nearly every case you'll find that we're in an area of chop, and that is where really patience as a trader comes into it, where we want to really take no trade. It means that we're usually consolidating in a choppy market. Now, with the short-term filter rules, that is, we've overlaid, of course, the long-term over the short, or vice versa. For a T10 or T2 or T10, I require a pullback to a minimum of the 50% line, which I'll show you in a moment. Now, the very important thing is, where do we use the long-term stochastic? Well, basically we're going to use the stochastics with almost every trend trade, and remember, trend trading is where the majority of the profits are made. And of course, the long-term and short-term stochastic form a very important part of what we call the T2, the slingshot trade, and the T10, which is the money on the floor trade. So let's now go directly to the charts, and I'll give you some examples there. Now, what I will do for a moment is just turn off the little spotter I had on here, and I just want to explain the stochastic. So I've got actually three stochastics overlaid here. So what I've done is put my short-term on, a short-term stochastic, which I've already preset to 5, 3, and 3. Now, some trading platforms, I will have the numbers around different ways, so just be aware of that. So you'll quite often see that I believe NinjaTrader, which I don't trade with, but many of our members do, but you'll find that the numbers are around a different way. So you've got stochastic length of 5, smoothing length of 3, then 3 again. Okay, so that's the setting for TradeStation. So what I've done is set that up, and by the way, I have two stochastics. I've got what we call the short-term setup here, and I've got another short-term setup here, which is what we call a 2 smooth, which I'll explain to you in a moment. Now, what I've done now in another subgraph, I've set up a long-term stochastic. So all I simply did was simply formatted the stochastic so it's a 21, 14, and 1. So there it is there, 21, 14 and 1. And I also colored the slow K here black. Okay, so you'll see that is black. All of these of course are explained in the PowerPoints and the cheat sheets. Now if you have a platform, virtually everyone watching this video has a trading platform, whether it be NinjaTrader, TradeStation, MT4. Virtually every platform nowadays, or Thinkorswim, is just to name a few, you can drag and drop one indicator over the other, and that's really what we're looking at doing here. Let me just switch this off so I can do this. So what I've done is set up my long-term stochastic in the subgraph here, and I'm going to drag and drop that over, let's see here, and you can see I've just dropped that over into on top of, if you like, the short term. So what I've now got is the long-term stochastic. I've dragged and dropped it over the short term. Now what we now have above here now is the exact same looking setup. So we can see I've already done the same here with my 2 smooth stochastic. Now with the 2 smooth, virtually every trading platform you can obtain a 2 smooth, and you can see here, rather than having 2 lines here, we now have 1 line with the 2 smooth. So I actually have a third-party indicator here for my 2 smooth. If you Google 2 smooth stochastic for TradeStation or NinjaTrader, virtually every trading platform you can either obtain free off Google a 2 smooth, or you can buy them. So I've purchased this from a third party. It cost me $197, which also include the floor pivots that you quite often or will see me use. So from the vendor, from trendpro.com, for $197 I've got the floor pivots and the 2 smooth. Now if you don't wish to purchase a 2 smooth, or you can't find the 2 smooth, very simply we're looking for simply a crossover. And if we line this up, and let me perhaps just do this here, where are we? Here we go. Right, if we line these up, you'll actually see they match up exactly, or virtually exactly. So we can see here they cross over. We can see this is turned over, crossed over, this is rolled over, and this is crossed over, this is rolled over. So it's set up exactly the same, with exact same settings, and it matches this exactly. So you can see here this is kicked up and this is kicked up. Now in this particular case, if we just look at this one here, it's within 1 candle, so we might have got in here 1 candle earlier. Now by the way, this is a custom Renko we're looking at, but it really doesn't matter what chart you're looking at. In actual fact, let's just have a look at this other one. This is the NQ. This is a tick chart. I've got the 2 smooth here instead of the instead of the standard stochastic. I've got a 2 smooth set up here, and we can see here, there it is there. So this is a tick chart compared to the Renko. Okay, so this is tick and Renko, and let me just set this up here so we can see it moves in exactly the same spot. So we can also see the Renko. You can watch my videos on Renko, it's a lot smoother. So this is a 144 tick compared to a 1 brick, which is 4 tick Renko. But you can see here that it's not rocket science, and what I'll actually do is just pull this down a little here, just make them a bit smaller. And so I'm waiting for the stochastic to roll over. Now in this particular case, we want to be, and remember earlier I mentioned it's a trend following strategy. So if we take a T2, we can see here that let me just move this along a little bit. And just while I see this, just remember that trading is rarely a case of absolute perfect. And we can see here the long-term stochastic is rolled over. So it was in no man's land, but it's rolled over. It's heading back down again. My short-term stochastics come up and rolled over. I then have a T2 trade. Now just while I'm looking at this here, just to be very aware, and we'll see this every day, when we have a trade coming down to the 200, time and time again, you'll see a bounce off the 200 EMA, which is exactly what's happened. So unless you had your stop 4 ticks above here, you would have been stopped, and it was the second entry that would have worked out. So just be aware of that, that when you're coming down, and it's what I call a converging of the EMAs. You'll see this quite often where you'll get a bounce, and your second entry is quite often the better entry. So anyway, it is a T2. You got stopped on that one. You then had a secondary entry. Here we have another T2. So we can see the short-term stochastic is rolled over. My long-term is oversold. Okay, so we're under the 20 level. It's flat. Short-term comes up and rolls over. Now I mentioned in the PowerPoint there that I'm looking for it to be at least of a 50% level, and what I mean by that is this. So where that line is now, and let me perhaps just put a horizontal line there for you, is, where are we, just there. Okay, so see that black line, that's a 50% level. I want to see at least the stochastic, the short term, come up and pierce that 50% level as a minimum. As an example, if we come over here, we can see that the long-term stochastic has been oversold. It's now rising, so we're now looking for long trades. In natural fact, you can see the long-term stochastic is rising, the short-term has come down and kicked up, and this is our classic T10 trade, a money on the floor trade. So we can see here that long-term's rising, so we're heading up, we're looking for longs. So basically you're just following for long-term stochastic. When it's overbought like this, we're looking for long trades. When it's oversold or heading down, we're looking for short trades. So once again, refer to the recordings, the videos, the PowerPoints and cheat sheets on these. Now this is what I mean about the 50% level. Let's ignore the long-term EMAs here for a moment, but notice here that we're virtually overbought. The short-term stochastic has come down to the 50% level. Now over on my too smooth, we can see it's extended further, but that's okay. So here it's come down further, but if you've got a standard stochastic, we're looking for that rollover, that cross, which is right there. Okay, and we have a long trade set up. Now we can already see that we've gone up there and tested it once, we come down, we bounce, we then have a second entry. So we had here a T2, sorry, my apologies, a T10. That is, it's a money on a floor trade. The long-term stochastic is rising, short-terms come down, kicked up. Now you'll also hear me refer to this as quite often a T9. Now just as a recap or a quick reminder, a T9 is basically the T10 setup. It's just simply when I get the white candle, the T1 setup. And basically a T10 is when you're getting usually a new higher low. Okay, so we see lower low, lower low, lower low. Now it comes up. It's a change in trend direction. Now some traders prefer not to trade these, that is, they're going to wait for the T2s, and that's mighty fine as well. But do your stats, you'll find overall that the T10s can be a great trade as well. So let's now just move back a little and we'll look for some other opportunities here. Okay, so very simply we can see here that we had a T2 here. We can see that the EMAs are heading down. We've come down, we've bounced on the 200, but we've pierced through. But you can see on the too smooth it's rolled over, and on the standard stochastic we've rolled over. There is your entry on the close of the candle. Here is your T10. Note here that the long-term stochastic is rising, the short-term's kicked down and kicked up. Now just remember, traders, this is true for any stock, any futures market, any forex. If I was to remove the label off this chart, it could be any market or any time frame. Markets are fractal in nature. That is, the setup that you have on, say, a 5-minute chart, the exact same setup will set up on a 4-hourly chart, likewise on a tick chart. So you'll see them appear across all markets. Now here we can see that with the too smooth we've kicked back down, so we can see we've got a slight different formation with the too smooth compared to the standard stochastic. So you actually had a T2 setup here on this custom Renko, and you had another setup just there, a slingshot. So there you had a T10. Notice how it's higher. It doesn't have to be higher. Sometimes you will find this a double bottom, but here in this case we had a rising long-term stochastic. You've got a slightly it's not quite a double bottom, it's a high low. Here you had a T2. You can see here that the long-term stochastic is overbought. It's come down and kicked up. Now you wouldn't have had that on a standard stochastic. That's going to happen sometimes. That's just the indicators themselves. Then you had another T2. On my standard, I would have liked to have seen, or I would have wanted to see, that come down to that 50% level. Now we roll over. Notice how the long-term stochastic is rolled over and it's heading back down again. Notice here I've got a new lower high, and so I've got both a T9, but remember the T9 is just a T9. T10 is just where I got the white paint bar. So let's just keep it simple, call it a T10 for a moment. We can see here we kicked up and rolled over. It was one candle later on your standard stochastic. Okay, so there's your clear rollover. Now here we had a T2. We are up against the 200, and you've also got the pivot, and this is something just to be aware of. Is quite often when we trade into a pivot we'll get a bounce. Here it's actually come through. Now remembering, traders, that what we're looking for is, generally speaking, when we're trading the T2 with slingshots, it's in the direction of the trend. We can see here that we've got a 34 EMA in a downtrend, the 21, which is the light brown, the blue is my 8, so they're all heading down. We can see that the 89 has started to roll over, but most importantly my long-term stochastic. Now I believe you could just trade T2s alone as a standalone, day in day out. Well, I don't believe, I know you could just trade those, just waiting for a trending 34. And what we've got actually here, traders, and this is what I mean by a fanning of the EMAs. Notice here that the 8 is separating from the 21, the 34 is separating. So this is what we call a fanning, and this is what we call angulation. So look at the distance between the high peak here and the 89. Now what I've actually done here is remove the MACD, which I'm going to do a separate detailed video very similar to this one on the MACD as well. But there's so many different ways to use the MACD, and the MACD I use for my divergence trading. Now once again, there are so many different strategies and methodologies and ideas when it comes to trading these indicators, but what will keep you on the right side of a ledger is when you're trading the long-term stochastic and the short-term stochastic in the direction of the trend. Now this is what I mean about being in no man's land. Now this is a judgment call. Notice here that the long-term stochastic is pretty much in the middle here, yet you've still had some good bounces, 34B, 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 89B in the market, in the direction of a trending market. Now notice you do have a trading range, and you can actually see that here, that here's your height here, and we can see we're rising. Okay, so we're forming a triangle here, and then finally it breaks away. So we can see here that you had multiple entries here. You could have traded this here as a T2, T2. You've got here the long-term stochastic. It's giving you a number of mixed signals here, but that is trading. And by the way, this is lunchtime, but you still had a nice trend, and that's where it comes down to your experience as a trader to really evaluate and to work out, is it worth taking? Am I going to take this trade? So we can see once again long-term stochastic is rolled over on both, so it's rolled over. So we're now looking for shorts. So we can see we've got a kick up here. This is a T10. Okay, so markets come down, kicked up, short-terms rolled over, and we're looking for shorts. Now as we go along here, you still would have been in this trade, but then you get a T2 formation. Right, so you had some sideways action, then you had another entry, and this is where in some videos when I'm trading live, you'll see me make multiple entries. That is, this is a fairly high probability trade. I'm virtually up against the floor pivot. I've got a secondary entry, so you'll see me actually usually sell more contracts into this weakness here. Now we then come down here and we've still got a good trending downtrending 34, but this is once again where we come down to the 200 EMA, and this is this danger area of a chop zone we've just got to watch. And we'll see time and time again price action bouncing off these. Now just while I'm here, this is what you'll hear me, and you'll hear me call this as a bet the farm trade. What I've got is a double top. My EMAs are heading down. I've gone up and tested that once, come down, tested it twice, and here is my short trade. But notice here that the long-term stochastic is in what I call no man's land. Now for newer traders, what you want to do until you build your probabilities up, until you really understand the settings, just look for the best of the best. For an example here, this is 9:55 to 10:03. We can see we're overbought on both charts or both subgraphs, and so what we're looking for here is strictly long trades only. And here you've got, over here you've got, let me just get my, I should have really bought, hopefully you could see that okay, but just here you can see the long terms coming back down again, short terms kicked up, rolled over. That's a T10. You could classify this as a T10 or a T2. It's not quite down there, but then it now rolls over. Here is a T2. The long term's now heading back up, short term comes down, kicks up. There is my T10, money on the floor trade, which a T10 once again is really a change in trend direction. It's confirming my new direction. A long-term stochastic was oversold, it's now heading back up. Now look at all of these slingshots in the direction of the trend. Notice here that we've got a fanning of the EMAs. The EMAs are heading up, so you've got multiple entries. Now traders, like with 34Bs, just be aware that after you've had 3, 4, or 5 in a row, quite often, not always, but quite often the market is heading towards exhaustion and you'll see a rollover. And this is where you also want to be careful when you get a slingshot or any trade hard up against the pivot, because quite often we'll get a bounce off the pivot. That's something you want to be very aware of. You'll get a pivot bounce. Now normally at this stage I would be looking at, and let's just have a look here and see if we can see it on this chart. Let's just go back to this. Okay, quite often then I would be getting divergence on my MACD. In actual fact, if I look down here at my MACD here, we can see the MACD is rolled over and it's heading down. So I've got a higher high in price, I've got a lower high on my MACD, so the market's rolling. And look at the long-term stochastic on both of these is rolling over. Once again, this is a tick chart and Renko. Many of you know I love the Renko, the what I call the newer version, the custom Renko, just because it's smoother. Now if you prefer to the tick charts, stay with the tick. In actual fact, I actually have a tick chart open, not on this one, but it's on another screen. So I'll have my, and let me just show you this actually. So what I've actually got here, and excuse all this other junk, things I have up there for various reasons, but I've taken off just for purpose. So what I've got is my higher time frame, my anchor chart Renko, and my trading chart, my entry chart. But just for the sake of that, the NQ here, I don't have that on there. But what I was going to say is I've got a tick chart for my Renko on another screen. Hopefully all that made sense what I was just trying to say then. And finally, let me just show you here. We can see that we can see the 34 is rolled over, 34 EMA is rolled over, the 8 is crossed through, and we know of course that represents a T20. And so now a T20 quite often will represent a new trend direction. So it's crossed through, and just remember that a T20, that is where you see the 8 EMA crossing through the 34, that represents within one candle a 50 CCI zero line crossover, which means that for many traders when they see a 50 CCI red, that is, it's crossed through the zero line. And if we look here, say the zero line here, and you could see the 50, if you could see a 50 CCI here, it's all red, it means they're looking for shorts only. If their 50 CCI is above the zero line, they're looking for longs only. Here in this case, when we see the long-term stochastic heading down or oversold, what are we looking for? We're looking for shorts only. If we see it rising, we're looking for longs. Now, as I mentioned earlier, virtually every trading platform you can drag and drop. Now, what if you can't do that? That is, what if you can't drag, and you've got a trading platform where you can't put a long-term stochastic on the short term? You may choose then to have two subgraphs. Okay, so you might have to have it on two windows, but I think you get the general idea. So we're looking for shorts here, and remembering these are trend following strategies. The 30 falls rolled over, we're heading down. Okay, so we're looking for shorts. We see it kick back up, we're looking for longs, and so we're following the trend. So traders, this is hopefully a good rundown for you on how to set up your and by the way, it is a slow stochastic. The fast is calculated differently, so this is a slow stochastic. Any questions, drop me an email, but please go to the relevant training videos, the PowerPoints and the cheat sheets, because they also give you a really good rundown on the settings required and how to trade these setups in more detail. Thank you, traders.